All right, hello everybody. This is Mr. Ling giving you guys a little video on accounting. So my first video is simply going to go over getting our adjustments in and getting our new adjusted trial balance in. Okay, so first thing you're going to do, I stole this Thomas Magnum PI so you can follow along in that packet. You're going to look at your trial balance here and look at your data and kind of take an account on all the things that you have to do. Right? Now, the first thing that you always have to do is take these numbers you're given and just go ahead and pop them into your worksheet right here, right? Unless you're told something else, unless you're doing an entry ahead of time, right, where you have to adjust cash before you put it in here because you have entries during the month. Unless you're doing that, you just want to go ahead and copy these in, especially when you're doing your adjustments. So I pop over here and notice I copied these over, and you just want to make sure that you're careful when you're doing this. Double and triple check your numbers. You've got the time to do it. Make sure that you haven't made any silly mistakes copying this information over. Now that I've done that, I jump over here and I look at my other data, and these are my adjusting entries that are given to me. So my first adjusting entry says supplies on hand total $380. Well, what's that mean? What that means is that my supplies right here, which were 1,050, are going to have a balance at the end of the month of 380. How do I get that balance? Well, 380 minus 1,050 is 670. And this should make some logical sense, right? I have 1,050, now only have 380. So what happened? I used up 670. So that's going to be that right there. Now I have to balance that out. How do I balance that out? Balance that out with my supplies expense, which is so often the case whenever we do one of these entries, right? An adjusting entry, expenses are almost always the thing that balances out our adjustment, right? You expense at the end of the month. I got 670 in my debit column here. I jump over here to my debit column and I go ahead and put in my adjustments, adjusting trial balance. Instead of waiting until I have all of this stuff and I've got tons of things I can have confused, I simply do, hey, I just put this in, I know it's 670, so I have my full balance. And up here, I had 1,050, I know I took 670 off of that, so I have 380. That way my adjustment balance is going along with me. All right, so let's jump to the second one. Second one is depreciation is $1,000 per quarter. Now, depreciation is on the value of equipment, which was 30,000. Normally, she'll give you some more information you have to calculate. For example, equipment has a 10-year lifespan straight line. What that means is I have to take this 30,000 and divide it by 10 years to get its yearly value, which is $1,000 per year. And then I have to figure out its monthly value or quarterly value. What is a quarter of $1,000? It's 250. And so my adjustment or depreciation would be $250 per month or per quarter, sorry, rather than a full 30,000. But instead of doing that, she simply gave us the balance. She said, hey, depreciation is going to be $1,000 per quarter. Now, whenever we're doing depreciation, we know we have a married thing here. Our first one is accumulated depreciation. Accumulated depreciation is a contra asset, right? So it's actually going to have a credit balance. And the reason it's credit is because it's taken away from our equipment. So down here, we put in our accumulated depreciation, which we know is $1,000, which is going to take $1,000 off the balance of our equipment. In fact, when we put it into our balance sheet, that is going to be listed, accumulated depreciation is going to be listed under equipment because it is considered a contra asset. So it's going to carry over into the balance sheet. Okay. Now that is always married to depreciation expense. Depreciation expense. Again, the reason it's depreciation expense and not accumulated depreciation is because we have to balance that out. And we know we always balance it with an expense at the end of the month. That was a debit, so this is a credit. And then I come over here to my adjusting entries or adjusting trial balance, and I pop those numbers over so I don't forget to do it a little bit later, and I'm good to go. All right. Entry number 3, interest accrued on a 6-month note payable issued January 1st, $300. Now, again, they were nice. They gave us the actual amount. Thank you, Mrs. Fishel. But they're not always going to be that nice. Sometimes they'll say, hey, your note payable, which here is $10,000. Note payable has a 10% interest, and it has a 1-year life. All right, so 10% interest over 1 year is $1,000, right? You take 10,000 times 0.1, or 10%. of 10,000. 10,000 times 0.1, which will be $1,000. And so that would be your interest. And you might divide it by 3 or 4 to get your quarterly amount, which would be 250. But that's not what they did. We don't have to do that calculation here. Instead, they just gave us the number. Yay. So how do we do this? We jump over here and we get going. So first we have our interest payable. Interest payable. It didn't say that we paid our interest. That's important. If it said we paid our interest, then we would have to credit our cash up here, and then we'd have to debit our interest payable. But instead it says we owe this interest in the future. So we jump over here to interest payable. Let me double check the number here. It's at $300. But I know I'm going to owe $300. That's going to be a credit because it's a liability. $300 is going to be carried over there. Now, how do I count for that? Balance it out. It's, of course, going to be an interest expense. Expenses are always debits, counteracting that. I come over here to my adjusted trial balance, make sure I got my numbers in there. I'm not going to mess that up a little bit later on. Voila, I'm good to go. Okay, let's jump over here to the next entry. The next entry says insurance expires at a rate of $200 per month. Insurance expires. What this means is we know we're dealing with prepaid insurance right here. We know we have paid for $2,400 worth of insurance, right? Now, we've used up 3 months worth of that because it's the end of the course. So we've used up $200 per month, or $600 worth of insurance has been used up. So we know we're going to have to credit our asset of prepaid insurance because you don't have as much as we had before, right? We've kind of pulled from our pool of insurance that we have because we used it up over the course of those first 3 months. So we jump over here. You can think of insurance a lot like supplies, right? We've used up a portion of our supplies that gives us a balance of 380. When we use up our prepaid insurance here, it's going to be $600 is going to be our credit, and we're left with a balance of 1,800, right? Just like we did with supplies, we had 2,400 in insurance. We used 600 of it, so our ending balance for that is $1,800. So we can continue to operate with insurance for the next several months. Okay, now how do I account for that? I put $600 in prepaid insurance. Well, of course, this is going to be our insurance expense. What else would it be? Insurance expense. And of course, that's going to be a debit into our account there. And then I pop that right over into my balance sheet because I don't like to mix it up later on. And we're good to go. 600 and 600. So far, so good. Okay, next up, our final one says services provided but unbilled. If I've provided the services, then I've gained service revenue. If I haven't been paid it, then it's going to be accounts receivable. Right? Whenever you're owed money, it's account receivable. Now, she used a unique term here called unbilled. So there's actually an unbilled accounts receivable. I looked it up. But you're not going to have to know that for the exam tomorrow. At least I sure hope not. If you do, we'll talk about it. All right. So unbilled. So how do I do this? Well, first, I need to find my service revenue, right? I know that I have created or offered another service, right? My service of $530. So right here in my service revenue, I'm going to pop in my, oops, in the wrong column. I'm going to pop in my $530 in the credit account, which is going to raise my service revenue. Let me get my calculator out here and make sure I've got it right. 13,620. I'm going to add that to my 530 because they're both credits. So I now have a service revenue of 14,150 in my credit account. Boom, bada bing. And then I know I need to balance that out, that 530. Well, how am I going to get that money? I didn't get it in cash, which often happens, right? You would just debit your cash and then offset it. But instead, I got it in my accounts receivable. I need to offset it right there. Right? They're going to owe me, or they owe me in the future. I pop $530 there. I go over here and get my balance. I know that those are going to add because they're both debits. So I got 5,620 plus 530. 6150 right there, and I'm good to go. Right now, I need to fill in the rest to finish my adjusted trial balance. Right, so I'm going to go ahead and do that. Right here, I've got 11,400 for my cash, and notice how easy this is. Now that I've done all the addition and subtraction along the way, all I have to do is carry these numbers over. 30,000. Make sure I'm in the right category. Here I've got 10,000 in notes payable. Here I've got 12,350. I've got 20,000. I've got 600, that's going to be a debit right there. Down here, I've got my expenses of 2,200, 1,300, oops, 2,200, 1,300, 1,200, 200, and then I know the rest of these have already been done for me because I did them along the way. Still think that's the easiest way to do it, but you choose how to do it for yourself. All right, now I need to add these up and hope that they balance. Now, thankfully, they gave us the actual trial balance so we can kind of check ourselves and see if we got it right. So we can check that our adjusted trial balance we're trying to hit is 57,800. Let's see if we did it. So I simply just go through and add these together. 6,150 plus 380 plus 800 plus 30,000 plus 600 plus 2,200 plus 1,300 plus 1,200 plus 200 plus 670 plus 1,000 plus 300 plus 600. Hey, look at that. 57,800. So down here, my total, 57,800 is my total, right? Now I have to balance the other side, make sure it's the same. So I got 10,000 plus 12,350 plus 20,000 plus 14,150 plus 1,000 plus 300, and boom, 57,800. I balance. Now, something I didn't do here, but you're supposed to do tomorrow, is balance your adjustments as well. So let me do that real quick. I know they're right because I just did the adjusted trial balance. Make sure you do it. If you skip it, like I just did, just plug your numbers in and you pop in your numbers. So that's 3,100. And then over here, I've got 670, 670 plus 600 plus 530 plus 1,000 plus 300, 3,100. So I know that balance there as well. Okay. So last thing I'm going to do is I'm going to pop these into our journal entries. Now, many people do the journal entries first and then do this. You really can do it either way. I'm going to go ahead and do it after I've done this because I know they're right, but don't have to go through, erase my journal entries, redo them, and then redo all of that. So I do it here, I get my balances, and then I go back and make sure I plug in those entries. So going in this order, my first entry is going to be my supplies, right? So I go here, I've got my date, which is 3/31/16 for this one. And my first thing I'm going to do is my debit. My debit is my supplies expense. And that supplies expense is going to be $670. Okay, that was my first entry. And you can always go back and check and be like, okay, where's my supplies expense? Yeah, 670, it was a debit, right? And then I took that supplies expense straight from my supplies, right? So here, my credit, I'm going to go ahead and indent this. I've got my supplies, and they're going to be credited $670. There you go. Now I have to do my quick description. So supplies remaining after quarter, something like that, ending inventory. And then make sure you put in your journal entries. So for here, my journal entry is going to be S1 because this is a standard entry. I know that this is an adjustment that's going to happen at the end of every single one of my months. All right, move on to the next one. Journal entry number 2. I pop over here to see what it was. Journal entry number 2 was my depreciation of $1,000. So I'm going to start with my debit, which is my depreciation expense, and that was $1,000. And then I'm going to follow that up with my accumulated depreciation, and that was a credit of $1,000, right? That contra asset there. And then, of course, make sure that you indent, if you would, your credit. And then down here, I'm going to note, and I'm going to say equipment adjustment, adjusted depreciation for equipment at the end of the quarter, something like that. And then I put in my entries, standard entry 1, or I'm sorry, that would be standard entry 2, not 1, because I know that this is going to happen every single month. That's why it's a standard entry. And I pop in my date. We're good to go. All right, let's move on, get our next journal entry. So I go back to this to get my third journal entry. I know that this is my interest one here. So it's going to be interest expense and interest payable. My interest expense is my debit, so I'm going to start with that. So I jump in here, I go interest expense, and it said my interest expense was $300. And then I do interest, sorry, gotta indent this, interest payable is my liability here, and that's going to be $300. These are both standard entries. It's my third one, so SE3, because I do this entry at the end of every single month, or every single quarter at least, and that's 331.18. I pop in my description, so I say accrued interest at the end of the quarter, something along those lines. Okay, let's do our next one, our fourth one. Go back here, see number 4. Number 4 is our insurance. Insurance. So my credit is going to be my prepaid insurance. My debit is going to be my insurance expense. Pop in my date here. Insurance expense. Debit for the insurance expense is $600. And then I do my insurance payable. Then it, because it is my credit. That's going to be 600 there. I know these are both standard entries because it's going to be at the end of every single month. All of your adjusting entries are generally going to be standardized. So I do SE4. And then I jump down here and do, hey, this is my insurance that was used over the course of the quarter. Okay, something along those lines. As long as you're describing what actually happened, you should be in good shape on that. Now time for my final entry. So number 5 is going to be my services provided, right? So my services provided, my first one is going to be my asset. This is my accounts receivable. So I pop in my date and AR, and that's going to be my debit of $530 for my accounts receivable. And then I go down to my service revenue. This is going to be my credit, so I got to indent it. Service revenue. That's going to be my credit of $530. Again, standard entries, going to happen at the end of every single month. And then your description. This is services rendered and rendered but unbilled at the end of the month. Along those lines. There you have it. You have all of your journal entries done. You have your entire worksheet done. You know what balances out. And now you just need to figure out what goes into my income statement, what goes into my balance sheet, and what goes into my statement of retained earnings. We're going to do videos later on for each of those. All right, I hope this was helpful for you.